Hello everybody. So today I wanted to make another unplanned video. As we just learned that Google was laying off 12,000 people today. And that's interesting because I made a video 2 days ago talking about how Google was next. And of course it was a rumor that has been around for a while, but that's it. Google did it too. Google laid off about 6% of the employees. And just like Microsoft, Google blamed the recession and the economic uncertainty for the layoffs. And if you've seen my prior video, you know that I think this is more of a never let a good crisis go to waste moment. Nonetheless, this is very sad. I think this is sad for innovation, and this is probably related to the Fed miscommunicating, or at least that's how I interpret these layoffs, and they are sad in my humble opinion, because the Fed, right, miscommunicated to the market in 2021. So many companies went public because we had confidence, right? We had a lot of confidence in the economy, a lot of confidence in the recovery from 2020, and we had Jay Powell telling us, we're not even thinking about raising rates. And a lot of business leaders were saying, we see some problems with inflation. We have supply chain issues. We see some issues. And not only Jay Powell was telling us, no, we're not even thinking about raising rates, but you had Janet Yellen, who was also talking about multiple times. I remember in September saying, inflation is transitory. That's not going to be a problem. That's going to change on its own. And by the way, I believe she was right on this one. Inflation is transitory. It's going away. But the Fed has no impact on the supply. It only has an impact on the demand of stuff, and it has decided to launch us into a recession by raising rates starkly and suddenly. And I believe it didn't need to, because the inflation numbers, I believe, are falling, mostly because it was supply chain related price increases. And we saw Tesla drop prices by like $15,000 on most of its cars. Well, why is that? Well, that's because the prices are going down and the inflation issues were temporary, right? A container from China was never going to be $10,000 for the longest time, right? This was all short-term movements. But nonetheless, as soon as Google and so many tech companies, right? Tech companies that I was investing in, that I was happy to own, saw that, rates were not going up. They were like, okay, let's invest heavily in the future. A boom is coming. An economic boom was coming, which, by the way, it's still coming, because that boom is related to innovation and it's not related to monetary printing. And so they invested heavily. They did the right things. They heard the people at the highest level of financial sphere telling them, we're not thinking about stopping the economy. You have to remember the talk of 2021. It was all about recovery from 2020, recovery from the lockdowns. That's what all it was. So Google hired, and of course we all know what happened then, which is Jay Powell, as soon as he got reconfirmed, as soon as he got his job back, boom, the biggest rate hikes and the fastest rate hikes in the history of rate hikes, period. So the Fed miscommunicated or lied in 2021, quite simply. And today, they engaged in so many rate hikes. This is the chart here. You can see the rate hikes. And the problem, quite frankly, is not the rate hikes. The problem is the speed at which the rate hikes are going up. Because if you had rate hikes, like they were, say, in the 90s or even in the 2000s, companies can adjust simply through attrition. Natural company attrition is about 5%. So when rate hikes take multiple years, companies can adjust. When rate hikes are so sudden, like they have been, you can't just let natural attrition. You can't just let natural retirement, natural people changing jobs. You can't just let that happen. You have to force it, and that's what I think a lot of these companies have been doing. And by the way, I don't necessarily think they had to do it, but remember, they're public companies, so there's probably tons of pressure in the boardroom to be like, hey, you have to cut costs because time horizons shorten when interest rates go up, right? Investors move away from stock and they start putting money in CDs and bonds. So time horizons shorten. interest rate hikes are like gravity for the economy. So, anyways, that's the reason why I believe they had to lay off so suddenly. But in my view, over the long term, this is much more a story about productivity. And will big tech companies prioritize productivity going forward, as opposed to prioritizing, say, growing the size of the firm with the number of employees? There is a long-standing misconception among CEOs that the more employees you have, the more your firm is large and successful. And I believe that is a misunderstanding, because software companies, it's much easier to scale your software up and down with interest rates, with gravity, with recession, with booming times. It's much easier for you to scale that with demand for software than it is to scale human resources. Human resources are not agile. Like you can't really move the human resources as fast as you move a subscription to a cloud provider, right? Or as fast as you move SaaS. So it's not as instantaneous. Human resources take 6 months, a year to make a good hire, and then if you have to do a layoff to do it right, it's 3 to 6 months. So they don't scale and they don't move. They're not as dynamic as capabilities such as software. Software is much more dynamic. And it's like, what if this is the quickest recession in history too? Like, I'm not even sure those layoffs are the right thing, because what if we have the quickest recession in history, which is what I kind of think will happen. We'll have the quickest recession in history, and the Fed will likely revert course, even though they say right now that they are not even thinking about reverting course. I'm kind of being ironic here, but they tell us, we see rates for high for long. We see rates until 2024, and you have once in a while an independent board member of the Fed saying, rates should go past 5%, past 6%. So they're still signaling that they're not going to cut and that they're going to be strong, But in 2021, they were signaling that they were not going to raise. So what if the Fed reverts course? Imagine all of the energy wasted. Hiring people, and these people were hired for divisions for the future, and now you just get rid of them because recession is coming, and you have to react to that. But it's not as agile. So I think over the long term, companies are trying to have smaller workforces. And the story, I think, for these larger companies is to become more productive. So it's a productivity story for me. And even though the cost to innovation and the cost to employees over there is really awful, and I don't want to undermine that. I think these big tech companies are trying to have as few employees as possible and to operate the business with as few employees as possible. And this has been true for so many of them. If you look at Google and the productivity of Google over the past 13 years, you can see it's been fluctuating a little bit, but the overall trend is way up. And between 2021 and 2022, of course, productivity went way down here, as I highlight, because they hired all of these people in 2021, starting in 2022. And of course, the Fed signaled in 2022 that they were going to crash the economy. Advertising revenue went down. That's the first thing to go. And then Google ends up with a less productive workforce. And this is my estimate with the revenue growth estimated for 2023, as well as the layoffs. I changed the numbers, and my estimate is that productivity will go back up, back with the trend line. So these companies, in my view, are trying to become more and more productive, and they're trying to have their agility, their dynamic abilities, their response to the environment. They're trying to do this through software and not necessarily do it through how many employees you have. So you can see here, this is Tesla. Tesla is the same story. Productivity for Tesla has increased, and for some reason I can't increase the size of it. So that's just the way it is. Okay. Cost savings. What are some of the cost savings for Google? Well, I think they're going to be pretty high. And a smaller workforce makes the firm more productive, of course, but they're going to be very high. We had a report in November, which I think is the report that spurred everything out from California, saying that Google was planning to lay off about 10% of poor, quote unquote, poor performing employees in 2023. That was an anonymous report. And we still know little about who is getting laid off, but this rumor in November 2022 said that the bottom 6% of employees, based on performance, could be laid off. And I would say that was pretty correct, because they laid off a little more than 6% of the employees. And so if we look at that number, we can assume that it was poor performance employees that were laid off. And this article actually highlights that Google typically lays off about 2% of poor performing employees each year, and that wasn't enough, of course, because the recession came so suddenly and was not predicted. And so what would be the cost savings? So let's assume $100,000 in cost savings a year per employee. And why I of course know that the salaries are much higher in the US for a Google employee, but the thing is that we don't know the share of overseas employees, and we also don't know how much of the work that were done by the laid-off employees is going to have to be outsourced or contracted out. Even though there's been a lot of talk about employees at Big Tech being unproductive, they still did a few things, and and this is going to have to be contracted out. Therefore, I estimate the savings to be 12,000 times 100K in my view, and that would be $1.2 billion in savings. So not a big, not large savings by any means. I mean, this is, I believe, a short-term move to please Wall Street, and over the long term, it's not going to make a difference. And like I said, what if this is the quickest recession in history, and we are back in boom times at late 2023, early 2024? Is Google going to have to go back out and hire more employees? Maybe. And thus what that means is that really, like I said, these companies should prioritize productivity, becoming more productive, and scaling without having to scale employees as fast as you increase your revenue. Anyways, this was not investment advice. This is just entertainment. Thank you for watching. Please subscribe, and you can follow me on Twitter as well. Thank you, and have a great day.